Comes to today's session. Hi, Bernardus. So as usual, we will start in a couple more minutes. So let's see any more people joining us today. All right. And also if you can see on the screen, yep, this is the topic that we're going to discuss today, and you might find it slightly different from what was written in the title with the EDMs and when it register for today's events. But the ultimate goal is also try to discuss what happens in the upcoming weeks in the markets, and I'll try to prepare you guys and try to discuss what is the bigger picture that probably can help you when you do your trading decisions. Right? Good day, Bernardus. So as you guys can tell, start from tomorrow, I guess we can call it as we entered into the central bank decision weeks. So we will have 4 central bank decisions in the coming week. Start from tomorrow. Start with ECB tomorrow, and then we will wait until next week. Next week we'll have Federal Reserve, we'll have BOJ, and also Bank of Canada, BOC. So, and also don't forget, at the end of next week, we'll have also the highly anticipated non-farm payroll. So yeah, I can say start from tomorrow, the market will be more and more interesting, and maybe will be more volatile. That depends on what are the decisions coming up, and also some of the economic data, and also if President Trump want to make the markets more happenings, it could happen as well. Okay, because we also at the same time nearing to the tariff deadline. Okay, next week. So I guess we'll have a lot of interesting news coming out, which going to impact the markets, and hopefully everyone here it will be on the favorable side, and then can capture all the trend and make a lot of profits in the coming weeks. Okay, maybe we'll just wait for 1 more minute to see any more people joining us. And of course, at the same time, if you have any question, you can type it up, see if I can answer you, or all the attendees here, we can discuss together. Anyone make profit from the recent surge of the cryptocurrency? Because I think for the past week, is like a hot cake in the market. It has the highest volatility, highest fluctuations. So sometimes we don't need to constrain ourselves, just look at, forex pairing, just look at gold. But then sometimes there's opportunities elsewhere. Bernardus, not trading on crypto. Well, you only trade gold, that is good enough, because I see recently the trend is also slightly easier to capture, rather than if you compare to what happened like 3 weeks ago. It have been quite sideways, and the trend is not so conspicuous, I would say. Okay, yeah, without further ado, let's begin. Yeah, and before we start, let me read out the risk disclaimers for today's event. This webinar is for informational and educational purposes only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instrument. Trading CFDs and other leverage products carry a high level of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposits, so it is important to fully understand the risk involved before engaging in trading. While we will discuss market analysis and trading strategies, These are purely for educational purposes and do not guarantee success. By participating in this webinar, you acknowledge that Pure Prime and I are not responsible for any trading decisions you make or any losses incurred as a result. All right, let's start. Okay, as you can see here, is the topic for today's webinar, and these are the things that I plan to cover today, which I will start with some of the important central bank monetary policy decisions, and I'll try to give my views on what are the decisions that we can anticipate and what are the implications to the respective currencies. And then after that, I will highlight some of the upcoming economic data. And also at last, I'll try to discuss on the oil prices and also the metal prices, which I think recently also have some of the good opportunities that maybe you guys can keep an eye, pay attention and some of those asset classes. Okay, yeah, without further ado, let's start. Okay, so like I say early on, we have actually four central banks monetary policies, but today's I just plan to discuss only three: BOJ, Federal Reserve, and sorry, I should say ECB. Yeah. So I'm not going to talk about Bank of Canada because I think we have more than enough currency, more than enough of the currency pairing for us to focus. Where sometimes the Canadian dollar and also the BOC is a bit hard to capture or guess the directions. So why not we just focus on what are the things that are more direct or more conspicuous. All right. So yeah, first of all, the ECB. So I want to tell you like the big story first, the current situations, and then like later on maybe I'll pull out the technical charts and then we will discuss on the technical. Okay. So what is the current situation now in the Eurozone is that the inflation is very stable and it's already reaching the targeted inflation rate, right, at 2%. Okay. And also if you taking into account of the rest of the economic data, like if you look at the job data, the job markets in the Eurozone is almost at full capacity. If you look at the unemployment rate, it's almost come at the lowest levels in the past few years. Okay, and also at the same time, if you look at economic growth, it's also kind of stable. And then if you see the point I pointed out here, it came the economic growth, the GDP came better in the Q1 in 2025. Okay, and then the job market is remain resilient. So what I want to say is that by looking at the economic data in the Eurozone itself, it's kind of predictable that the ECB might just not doing anything tomorrow with the upcoming monetary policy decisions. Okay. And it will just left the interest rate levels at 2% doing nothing. But if you guys pay attention at the news and especially the EU and the US trade tensions. Okay, now at this moment, what we can tell is that Vietnam, Japan, Philippines, and some other countries have already reached a trade deal with the US, with Donald Trump, basically. But the situation with the Eurozone is slightly different. What we can read from the news is that the relationship now is a bit stiff, okay, and both sides stand off with the trade deals. They are not agree with the terms, so that is the risk over there. So if by next week there is no deal between these two economy, what could happen is that if the US imposed a very high tariff on the Eurozone, okay, which means that it's going to have a bad impact, negative impact on the Eurozone's exports. What does it mean to the Eurozone economy is that it will slow down the economy. Okay, so basically it's turn back. So if the ECB taking into account of this situations, this projection, what they do that they could leads them to considering to cut the interest rate lower. Why? To boost the economic activities, to offset of the negative side from the White House tariff. Okay, maybe this one to boost the domestic economic activities to offset what will be hammered down or hindered by the US tariff. That could be possible. This is the only big story that you want to bear in mind. Okay, and if you look at the chart, right? If you look at, I'm not sure like how many of you guys here know about this EXY. So maybe you guys know about the dollar index, the DXY. So this EXY has come up from TradingView. So if you have TradingView, I'll sure we can register it for free. You can find this Euro index. So this is also just give you a glance like how strong or how weak the Euro strength it is. Okay, this is just the first how to say index that we can refer to when we want to talk about Euro, when we want to trade on Euro. Okay, but I would say is that the current situation, okay, for me is that previously the Euro is kind of strong. Okay, but when something traded too strong for too long, at some point it will face some retracement, will face some pullback. So what I want to say is that probably this is around the corner. Okay, if you look at let's say EUR/USD, okay, it has already rebounded. Okay, it's kind of rebounding in the recent trend. Okay, where it has already break above from the downtrend. Okay, so what I want to say is that if tomorrow the ECB decision is favoring the euro, then you can go ahead with the EUR/USD because the trend is already there. It's already have a bullish trend reversal, and of course now as like have a slight technical pullback. Because I'm not with you like from time to time, right? Every hours I can update you what to do, right? But what I can share with you is that the bigger picture. Okay, what does it mean is that if I'm telling you that in the bigger picture, day one or H4 time frame, where now at the moment the pairing is moving in an uptrend. So of course you can tell in a smaller time frame, okay, in a shorter time period, it often lead to a retracement, sideways or retracement, but it tends to go with one-sided if there is no major structural break. Okay, which means now stay uptrend, is remain uptrend. So if you look at the chart, you see it's time to where the bearish trend or where the pullback is already ended, then it's the time for you to jump into a long position. Okay, this is how I trade often. Okay, so previously you can see it's like rebound but go down, rebound but go down. But you can see like in a bigger picture, is it has a tendency to go down, right? So anytime when it touches the boundary here, I might think whether or not it is a time for me to jump into a short positions, or I know it is a time for retracement. Similar to like when it touches the lower boundary, then I will know that, oh, here is the time for me to TP, or maybe I can jump into this opportunity to catch a very short-term long position. So I'm not with you, tomorrow or on Friday, but I just want to share with you the bigger picture here. Okay, if the US dollar is very weak, and at the same time the euro is kind of strong. So if tomorrow the ECB news is favoring the euro, at least you can tell what to do. You can jump into the EU pairing to trade on and long positions. Okay, what is the another alternative is that you can look at the EUR/JPY. So what happened with the EUR/JPY is that it has been very strong uptrend all the way, okay, since I don't know, like April or March. But recently, if you look carefully, it almost have a downtrend is forming. Okay, the downtrend is forming for EJ. So what I'm trying to say is that if tomorrow the news is bad for the euro, you can see if the euro is losing its strength, then maybe you guys can consider to have a look into the EJ pairing, and then you might think, oh, then that is the chance, okay, because its gradually is going down. Another one is maybe EUR GBP. Okay, the EUR GBP. Why? is because it has been uptrend all the way, right? Uptrend all the way, but recently have a cap. Okay, that is a cap for the Euro GBP, and obviously that is another uh confirming signal is that it has it has a double top over here. Okay, so it means that at least we can tell where to for us to set a TP, I mean a stop loss, and we can enjoy a greater range of a TP for short positions. Okay, because if you want to jump into the short positions for Euro GBP, of course we want to bet that it can go beyond the previous low over here, right? So yeah, so I give you this idea is that yeah, by tomorrow when I'm not with you, if you look at the news, if you want to trade on news, if you see that the ECB monetary decision is not favoring the euro, you can know what to trade. And if it's favoring the euro is getting strong, you also can know what are the better pairing for you to jump into. Okay, so this is the ideas that I want to come up with the webinar sessions today. Okay, so this is what I can share with you regarding the ECB monetary policy decisions and also the implications on the euro. Right now, moving on next. So, Federal Reserve on 30th of July, we'll have the Federal Reserve interest rate decisions. But what I can tell you now is that 95% of people in the markets believe that the Federal Reserve will hold the rate unchanged. Okay, so which is I also think that I think that the Federal Reserve will just keep the rate unchanged. It's not going to cut another 25 basis point. Probably it will wait. We have to wait until September to witness another rate cut by the Fed. But yeah, I strongly believe it's not going to to happen this time round. Okay, why? It's because my argument is that Jerome Powell and also some of his colleagues actually positioning the countries and anticipates for a rebounding of the inflationary pressure. Why? Mainly is also because of Donald Trump tariff policy. So when he want to boost the domestic economy, right? So if you want to have this what we call the protectionist policy to safeguard the home country's economy, and he imposed tariff on the imports goods to the US. What actually will happen is that the consumer will eventually have to pay the price because the things that the import from China, import from the Euro, import from anywhere, Japan, they have to pay a higher price tag, and eventually the consumer have to pay that, and it takes time. It's not that by April Donald Trump imposed that and the inflation will reflect in May or in June. Probably by now, the July inflation gauge, then we probably can see some of the sign of a increasing inflationary pressure. So I kind of sure that only by until September, if there is no sign of rebounding in the inflationary pressure, then I think the Federal Reserve will consider a rate cut. But this time round, I think quite sure is that the dollars will the Federal Reserve will hold the interest rate unchanged. But what is the situation now with the dollar? Is that if you look at go for this one. If you look at the dollar index, you can tell it has now turned quite bearish. Okay, I think since last week it has already turned quite bearish, and then it's already have this trend. It's very conspicuous. Okay, and yeah, tons of a lot of economic events is happening this week that could pivots the dollar, but at the moment it's getting weaker and weaker. It's supported even by the RSI and also the MACD. So even if you look at the market now, the Japanese yen is kind of strong and it's kind of weak. But if against the US dollar, you can tell the US dollar is even weaker. Okay, so and of course we know that the Federal Reserve is going to hold the rate unchanged, but that's going to happen next week, next Thursday. So by before that, there is not much of a economic data that's going to harm or going to have an impact on the US dollar, at least on Thursday and Friday. So these 2 days, maybe you guys can have a bearish bias on the dollar and try to hold a bullish bias, or hold a long positions for anything that go against the US dollar. For example, like the GBP USD and also the EUR USD. Okay, the chance is there. And later on, I will try to also discuss the PCE and also the non-farm payroll, and then let you guys to gauge. So if the Donald Trump, the president is not going to announce any positive things towards the economy, towards the trade policies, and there is no any positive data from the PCE, from the non-farm payroll, and also from the Fed, then we can actually predict that this is already U-turn. That is no longer a uptrend, and if you pull a Fibonacci retracement from the bottom to the top, okay, it's almost going to break below from the 61.8 Fibonacci retracement, breaking below here, which is going to turn upside down and erase all the previous bullish trend. So yeah, you guys can pay attention for these levels, and yeah, just trade anything that against the USD. For example, if you want, you can tell yeah, it has already have a bullish trend reversal for the GBP USD and the EUR USD as well. Okay, so yeah, a lot of uptrend is here. Okay, sorry, USD. Yeah. Sorry for a laggy. Yeah. The Euro USD especially also is trading in a very solid bullish trend reversal. Yeah. So you know, this is the bigger picture in the markets. Anytime we see there's a retracement, then you might just wait for the retracement to finish, the pullback to finish, and then you can jump into the long positions. Because when the trend is going in an uptrend in a bigger picture, the chance for you to profit from a long positions is higher than you try to go against the trend, unless something like this happen. Okay, what is mean by a structural break is that if the rebound is already gone higher than the previous low, then it is quite sure that we are entering a reversal. So yeah, unless this kind of behavior happens, we just stick with the current trend. This is how I do. Okay, I'm not sure about you. You can type it out to discuss, but this is how I do when I trade. Okay, and moving on. So for the BOJ is as well. If you look at the inflation rate in Japan, and also if you look at the wage growth, if you look at the GDP, you can say yeah, it has been very persistent. Okay, there is no doubt that the Japan Central Bank, the Bank of Japan, will have no hesitations to leave the rate higher, because they already did that, I think, 3 times by now. Okay, get rid of their ultra loose monetary policies and try to normalize the interest rate decisions. But yeah, just because of Donald Trump's tariff policies, that is like stopping the central bank, the Japanese central bank, to continue to have their rate hike. Okay, so this is the only factor, I would say. So yeah, and what we know now, by far we can tell that it's still not done yet, because we still not sure any U-turn from President Trump until 1st of August. But what we have, the positive news, is that Japan and the US have already reached a trade agreement, so which is temporarily favoring the Japanese yen. But if you look at the economic data today, that is some negative data for the Japanese yen, which is the core CPI. But it came lower than the previous reading. It came lower than the market consensus, but I think it is still good. It is still at above 2%, which is favoring the BOJ to continue its rate hike. But just that, yeah, what is stopping the BOJ now is only because of the Trump policy. Okay. So what I'm trying to say is that at the moment, the Japanese yen is kind of strong now. Okay. It also have showing sign of a reversal from the previous 2 to 3 weeks of a downtrend. Okay, I think it's now getting stronger and stronger, especially if you look at the USD JPY. It's amplifying the strength of the Japanese dollar because recently the US dollar is kind of weak, right? I show you the dollar index earlier. So yeah, that is a trend for a downtrend for the UJ pair. It means that the Japanese yen is getting stronger and stronger. Okay, this they have a corrections from the previous week Japanese yen. Okay, so and what I want to share with you also is that now if you look at the UJ pair, the trend is already started, right? It's already start to run. But I want to share with you the chance here is that the EJ just started. Okay, the EJ is just started. So anytime when you see the Japanese yen, anything that coming out that is favoring the Japanese yen, you can always go with the EUR/JPY. Similarly, the GBP JPY also just merely started. It's very different from if you compare to the USD JPY. Okay, it has already ended with the uptrend and it's like turning in a bigger sideways trend now. Okay, I hope that you can see the similar trend as I do. Okay, it has already stopped gaining. Okay, if you draw a uptrend like this, okay, just a bigger picture, right? Just a bigger picture, you can see it almost stopped gaining, and if it's drop below from this box sideways range and drop below from this uptrend support lines, in the bigger picture we can tell it has just started the downtrend. Okay, which is also supported by the RSI and MACD. So if you see again some bad news for the UK, some bad news for the pound sterling, and you see there's the showing signs that the Japanese yen is getting stronger and stronger, why not give the GBP JPY a try? And you can keep an eye on this particular levels at 198. So you can capture a bigger trend. This is H4, remember? Okay. Of course, I even recommend you guys, if you really want to place your trade, place your order, look at H1, look at 30 minutes chart to confirm your entry levels and also your exit levels. But because I want to tell you the story, I want to tell you what happened now in the markets. So better for me to use a longer time frame. So at least you guys can see more clearer what is happening now. Okay, and let's move on. Right, and I picked two critical economic events that is coming up next week, okay, which is one is the US PCE. So why PCE special is that the Federal Reserve look at the PCE as a priority inflation data rather than a CPI like the other economy or central bank. So this is the Fed's favorite inflation gauge. So that is why it is more important if you want to trade on the US dollar, if you want to try to guess the upcoming Fed's monetary policy. This is the piece of economic data that we want to look into. Okay, my prediction is that the PCE will come at a higher level than the previous reading. Okay, will come hotter than the previous reading. And if you look at the June CPI, it has already has showing sign of a rebound, and the PPI unchanged. So with this situation, this is my predictions for the upcoming PCE reading. So by what is mean if the PCE really come like what I say higher, beating the market consensus, beating the previous reading higher, it means that there is higher chance that the Fed will not start to cut rate. It will be favoring the US dollar to strengthen the US dollar. We will see the US dollar to rebound. Okay, this is what we mean when we look at the PCE reading. Of course, if we are talking about a news trading, the effect of this PCE maybe will just last for 30 minutes or 1 hour. That is, have to depends on next week, whole week. If you see the dollars continue to trade in a very bearish manner, then you can only trade for 30 minutes to 1 hour if the PC reading come very, very strong, come very high. Okay, but ultimately then you have to stick with the bearish bias for the dollar. So this is how I trade on the news. Temporary, if you look at it, the PCE is high, then you can jump into a short-term, short positions for, let's say, GBP USD, EUR GBP, or a short-term long positions for USD JPY. So this is what I do. But then I will know, I have to tell myself that this is a very short-term trade. Longer term, I will stick with what I see. Okay, in the bigger picture, I know that the dollar is kind of weak at the moment. Okay, so the logic behind why I predict the PCE will come slightly stronger is also because the effect of a import tariff that imposed by President Trump will gradually start to kick in and will push the good and also the service price higher. Okay, and also at the same time, if you refer to the wage growth reading, right, you can see there's a bit of increment, and that will also help to push the consumer spending. And when the consumer spending is going up, it will also ultimately push the inflationary pressure higher. Okay, so yeah, this is a question for everyone here. High chance for a hot reading, and the US dollar will have a trend reversal. That is, let's see what happens next week when the PCE reading comes up. Okay, and yeah, don't forget a very anticipated job data from the US. Okay, this is coming out from the Labor Bureau. Okay, we can only get this from the US. Okay, which is the non-farm payroll next Friday. Okay, so the market, the economists, and also if you look at the Bloomberg, the Reuters analysts, they're also predicting a higher reading for the June non-farm payroll, okay? And in the July non-farm payroll, okay? Because the non-farm payroll is going to announce in August, right? Excuse me. So yeah, they suggest that the non-farm payroll will come in between 194 to 206, which is an increase from the July 147. Okay, it's about like 50 to 60K of increment, which is I think it's quite huge and will definitely have a positive impact. We're going to boost the US dollar. Okay, but at the same time, if you look at the markets, also some of the economists also predict that the unemployment rate will increase to 4.3%. Okay, the current one is at 4.1%. So this is kind of going to offset the hotter NFP if both reading really came in line with the market expectation. Okay, if all these two assumptions came true, then maybe it will just left the dollar unchanged. Okay, because one data offset with another data, so nothing's going to happen much if for the next coming up Friday's non-farm payroll. So this is for me to prepare you guys. Sometime, not every time when the non-farm payroll announced, then we can see a huge movement in the markets. Not every time. Sometime the market will see, oh yeah, the non-farm payroll is strong, and then the unemployment rate is also strong. Hotter, then yeah, nothing's going to happen. Offset each other. Okay. Right now, let's move on to the assets. Okay, so I'll cover the oil and also later the metals. So oil is a bit interesting. Why? It's because early on, when when Israel and Iran has intensified India conflict, you can see the oil price skyrocketed, and after Donald Trump announced the ceasefire deal between the two countries, and then all the previous gain just erased. And what left with us is that we have, I think, more than 2 weeks of a sideway for oil. And we can tell not, every time when there's a sideway for too long, it will followed by a big, big trend. So the question for us is that when is the trend is coming? I don't think it will last for too long. We can anticipate for a big trend upcoming for the oil. So we have 4 factors that actually are here for us to discuss the upcoming oil prices. First of all, we have to look at the Middle East crisis. Of course, I already said we have the Israel and Iran conflicts as already almost solved. Okay, there's no more crossfire at the moment, but on and off, there's this reports that the Israel continue to strike on the Gaza Strip, and on and off, there's still hostages were taken, and then also life were taken. So this is like type a bomb that we don't know when it's going to explode. If suddenly the conflicts escalated to next levels, then it will lead to a rebound of the oil prices. But now at the moment, it's kind of peaceful compared to what happened last year when there's huge, massive strike from the Israeli side, and also during the time when Israel and Iran crossfire with each other. So there is no more this big scale of attacking from the region. So at the moment, that is why there's no catalyst for the oil prices. Okay, but what is bad now for the oil prices is coming from OPEC, the world biggest oil cartel in the world. Okay, already announced that they're going to increase their oil supply by more than 500,000 barrels per day in August, and which is higher increments than what the market predict. And also at the same time, they also hints that they will continue to raise the supply in September and also October. So when we know that the supply is almost certain to increase, right? And also at the same time, we have this sort of a trade war, okay, initiated by President Trump, okay, with all of the tariff that could harm the economic activities, and also ultimately that could harm the demand for the crude oil. Okay, so when on one hand we have a increasing supply, and on the other hand we have a lower demand for the oil, it will ultimately lead to a downtrend for the oil. Okay, and also if you look at the US crude stockpile, the latest EIA data, it shows a significant buildup of 3.46 million barrel into their stockpile. It means that the demand, the usage of the crude oil in the US is lower. Okay, that could also have a bad implications on the oil prices. And yeah, lastly, the Donald Trump tariff policy, they already said it is going to harm the economic activities. But good news is that before the deadline, have already some of the big countries, or some of the big trade partners with the US have already come up with a deal with the US side, which sort of mitigates the trading risk between the US and its counterparts. Okay, so this is sort of some minor positive factor for the oil prices, right? So what is very interesting is for the oil price, okay, right, hold on. So for the oil price is very easy to watch, is that I hope that you guys can see a similar thing that I see. We have a very obvious pivotal level, okay? What we call the pivotal level is that previously it served as a resistance, and now it serves as a support. So definitely this line, okay, near to $65, okay, is a very critical pivotal levels for the oil prices, and it has the tendency to go lower, okay, which why I talk about so many negative factors for the oil prices. Once the oil price is going to break below, then it is a very, very solid bearish signals for the oil prices. Okay. This is what I said early on when the Israel and Iran conflict, and then after that when the ceasefire deal came out, and here is the sideway. And why I say it's bearish is that because it have already ended the uptrend. Okay, the uptrend is already ended. Okay, it's very pretty easy to see. And if you don't want to take risk, we can just wait until the oil price break below from these very critical levels. It's not going to 100% happens that it's definitely going to break. it could have also like this, a rebound, then that is fine. We can trade ousting. But if it's break below, it will be a big trend upcoming. It could be like, 100 or 1,000 pips following a breakout for the oil prices. Okay, right. So this something that I already anticipate and something big that I already anticipate, which is the oil prices. Right now, moving on to the metals, I saw like three very interesting um metals that you guys can really keep an eye on it, because I see like for example, Bernardus, you are only focused on the all gold. But I say like if you look at the trend for the past 3 weeks, you can tell it's relatively sideways, and the trend is slightly hard to follow. This is why it draw my attention to some other metals which I think the trend is more easy to spot and the trend is slightly easier to follow. Okay, never mind. Um, we go one by one for the gold, right? Obviously, you can see the recent trend that is showing sign of a rebound. People seeking for a safe haven assets, especially like early this week, when we know that the Japanese they faced a political issues, okay, where people losing confidence with the Japanese yen, so people turns to the gold. And also at the same time, the news came out says that the EU and the US, the trade deal, the trade discussion has become stiff. Um, Standoff discussion. That is why also lets the people to jump into the goal. And also at the same time, like what you guys see at the chart, the dollars is gradually easing in the strength. Okay, so all these three factor, and also if you want add the minor one, the Middle East crisis is still there. I'm not going to say escalating, but it is still there. It is still continuing. So that is why gradually I see the gold is like no changing in previous downtrend and is moving up. Okay. Right. So yeah, this is very obvious, right? And previously, this is what I say. It's like sideways, and I draw this, inverse, head and shoulder, but it didn't happen. And when I see another uptrend, didn't happen again. It's kind of hard. And now the trend is more obvious. Okay, after it break above from the downtrend, and it's like now break again to into the psychological resistance levels at 3,400, and it's really not shying away from its all-time high. And yeah, hopefully if you can follow the trend, like up, and then technical pullback, technical retracement, strong rally, and then a slight pullback, strong rally, slight pullback. And yeah, you can guess what is the upcoming trend. Okay, and at least we can tell the winning ratio. Okay, the win-lose ratio is there. You can give it a try. You can set a tighter stop loss, but the room for the goal to grow to yeah to jump is pretty high. Okay, especially now at the moment where there is still a lot of uncertainties regarding the EU and US trade deal, and also we have some uncertainties because um a lot of uncertainties from the major central banks. Okay, so yeah, Bernard asked, the goal is bullish trend now. At the moment, yes. Okay, what from what I see, okay, but of course you have to do your own analysis. You do your own, risk management. Well, where is the entry for your long position, and where is the exit for your positions? That will be an art for you to learn. All right. Now, moving on, silver. Silver, we can say it is also an alternative for the gold, and it's not so expensive. Not only that it has the characteristic of a safe haven, but at the same time, it also have a strong industrial demand, which means that people actually use the silver to make things, especially involving in the technology sector. Okay, they use it to build chips and whatnots, right? So, if you guys have been paying attention on Wall Street, you know that Nasdaq has been um, trading in a record high, and then Nvidia skyrocketed. You can tell the entire tech sector is really resilient, it's very booming. That is why the industrial demand for the silver is actually getting higher and higher. Also, with sharing the same characteristic with the gold, where people also seek the silver as an replacements for a safe haven play. So this is the factor why we also can pay attention at the silver, okay, the XAG. Okay, and also the trend is very obvious. Okay, it has been like what happened with the gold, the uptrend, sideways, uptrend, sideways, uptrend, sideways, and then uptrend, and it's like now trading in the highest level since 2011. So it is very bullish. Okay, so you guys can always follow with the trend. Any retracement happens, it's a time for you to jump into a long positions. Okay, of course, when you want to jump into the long position now, you have to come up with your own risk management. Where is your stop loss? Because if you stay long enough with the markets, you can anticipate some of these kind of patterns to happen, where a a wrong long bullish rally will followed by a strong pullback, strong retracement. So this is depends on like how when is the retracement coming up next. But what I want to say is that the current situation is kind of healthy, because we already faced a first uptrend and retracement, and then this is a kind of fresh uptrend for the silver. So it is an opportunity for you guys to at least can consider to pay attention at. Okay, the next one is copper. Copper also is a demand push price, and it come up with the it's already now traded to the record high, and also with the help of President Trump, okay, last week or 2 weeks ago, Donald Trump actually imposed a import tariff, copper tariff, to yeah. So that is also at the same time you can see the copper actually skyrocketed. Okay, what is the beauty for the copper price is that if you look at the copper price. Okay, this was what I mentioned early, like the copper prices skyrocketed on the day that Donald Trump say he going to impose import copper tariff. Okay, but what I say is so strong. Why I say because of it is very up bullish now is that it actually have a, if you look close enough. Okay, if you look at H1, let's say, you can see that is a pullback already, but the pullback is very minor, and after that, after a long sideways range, it has now gradually moving up. Okay, so this is a very bullish pattern for me. Okay, why I say it's bullish also, if you look at bigger time frame, if you see it has first already broken above the Fibonacci 61.8%. Okay, and if you pull another Fibonacci, okay, for this particular uptrend, it has found support, okay, on above 0.5, and the trend continues. So there's this double confirming trend or indicators that we can tell. Overall, the copper is trading in a very extreme bullish manner now. So you guys can pay attention at it. And what is the beauty of it is that let me get rid of the Fibonacci retracement. It has already come to its next resistance level. Okay, this was the first jump, and then it has already reached the same level. If breaking above this level, it is very easy for the copper to challenge its psychological price at 6.00. This psychological price, yeah, the range is still there, and if you want to consider it, the no the win-lose ratio is still quite nice for you to jump into it. Okay, you can set the previous low as the stop loss, and then at least can try to believe that the copper can at least reach to the 6.00 psychological levels. Okay, so this is some of the methods that I want to introduce you. Not only can pay attention at gold, but you can also consider to have a look into silver and also copper. Okay, so yep, here come to the end of today's session. So I hope that you guys can have some insight, have some clues of what's coming up next in the market. Okay, and yeah, hopefully can help you in your futures trading decision making. All right, so open for Q&A. Any question you guys want to ask? All right. Haton asked about the gold again. So for gold, really like I say, I already anticipate the dollars to gradually become weaker and weaker, right? But if you really want to ask me, like I say, I really love to use the Fibonacci as to tell me where at least my support and resistance level. If you go for the H1, yeah, it can always see is very strong. Why? If you know how to use the Fibonacci, right? The faster it found it support when there is a pullback, the stronger the uptrend is. Okay, for example, if it wait until the 61.8 only it rebound, this means that the bullish trend is not so strong. But it has rebound at near 38.2, it means that this bullish rally is is stronger, at least stronger than the 61.8%. But now what we have for the gold price is that it has already almost to say found support at 23.6%, okay, at 3420, for example. So I would rather believe that in a bigger picture the gold is still trading in a very strong bullish manner at the moment. Okay, this is what I say. But of course, the market go live 24 hours, 5 days. So something's gonna happen and then it's gonna change all the trends. But I'm just sharing with you what I see now as that it's very, very strong, it's very, very solid. Okay. Yeah, thanks, Pragasi. Thanks for your support. Any more questions? Okay, then I see no question. Okay, so if no questions, then yeah, we can call it an end for today's sessions. Right. Yeah, again, thanks for your support. I wish you guys make more profit in the upcoming sessions and see you guys in the next one. Thank you. Bye bye.